Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. Some big things going on in the consumer discretionary group over the last couple of weeks and months, and obviously we have earnings coming on this week, so we've got lots of news coming out seemingly every day. I want to cover off some of the stuff I see changes both ways. And in the home builders, a lot of them look like they're starting to pause, which is a bit of a surprise to me. The apparel, some of the leaders are starting to appear there, and it might be heading into the holiday season as the reason for that. Same with footwear. And then gambling is also pausing, and that might just be due to the increase in the coronavirus issues starting to appear and slowing that area down. But we're going to quickly fire through a lot of charts here to try and get that done. Let me just show you. So this is what I did this morning. I went for a flight with a friend, and it was just a stunning day at the Rocky Mountains. And anyway, I thought I'd share that with you. It was just quite pleasant. Oh, looking here. Okay, and I just want to scoop down to... what's the best way to do that, Greg? Let's just go here. Okay, so what I've done, I'm going to drop in and show you my summary view first of all. So what I've done when I sorted the charts, I have a whole group called Consumer Cyclicals. And then within that group, they're laid out in different industries. So this is the apparel, auto parts, automobile, broadline retailer, et cetera, et cetera. So we're not going to cover them all because like business training and agencies, there's not a whole bunch in there that looks particularly wonderful. Broadline retailers has a whole bunch here with really high scooter rankings, so that's why we're going to cover some of those. Anyway, that's what we're going to do today, is shoot into some of these individual groups and work through them. I'm going to start with the apparel retailers. And as we go forward, maybe you'll find some ideas in there that you like. I think there's some charts that are starting to become more compelling. So here's L Brands, and it's been running for a while already. It hasn't done much in the last 10 weeks. So I would just say it's got the strongest scooter ranking, but it just seems to be leveling off already. Gap continues to climb. Nice looking chart. Duluth Holdings continuing to climb. And again, this was $26 a couple of years ago. It's sitting at around 17.5. So it's still got some room to the upside. Signet Jewelers just starting to get to where it was back in January. This chart's got a long-term downtrend, so that wouldn't be my pick. Land's End had a long-term downtrend and has started to tilt its way up. Still doesn't look like a chart I would like. I don't like these big choppy price bars in here that all of a sudden you just get blown out one way or the other. Foot Locker, this one's been trending up, and Nike's been trending up as well, but this is just sitting up around that $40 level, trying to get through the spring level. If this can keep going here, there's a pretty nice acceleration point, but in general, the chart has a 5-year downtrend, so not that hot. Boot Barn had a really nice uptrend going, and looks like we're just starting to get into this $30 area. Any sort of turn up here would be nice to see. Perhaps it could resume the trend it was on. Buckle, right back to previous highs. It's actually had a really nice surge this year and last year. But the year before was pretty much sideways in the previous 2 years. So it feels to me like it was down, trying to pick up, and maybe it's got more in the tank, but it's not really the chart I would go to just because it doesn't seem to have any real trending history. American Eagle Outfitters, it broke out to new 52-week highs and then immediately pulled back. It's trying to find support at the 10-week moving average. Nothing really going on there that's too groovy. Zoomies, in here what you see is a chart topped out late last year, fell into the spring like most things, but didn't have any rally. January, February was basically unwinding. And now we're right back to the levels we were at last year. So the chart doesn't look that appealing. Moving on to Urban Outfitters. So what you see here is our scooter ranking starting to drop, and once we get below 75, you'll see that these charts are actually quite difficult to look at, nothing really comfortable. So Urban Outfitters, perhaps it can start to turn it up here, but again, it's been in a 2-year decline already, so not really hoping for a lot there. Abercrombie and Fitch, just back to where it was at the beginning of the year. The chart doesn't look great overall, so it's probably something I would avoid. Guess, not really doing anything. I mean, the chart's rising, but really just kind of grinding higher. Lots of overlapping bars, nothing really getting emotional to the upside. Shoe Carnival topped out about 6 or 8 weeks ago, seems to be pulling back now. Below the 10-week moving average, it's kind of got to find support in here pretty soon if it was going to start to make a run. But again, these charts are so choppy, there's not a lot of charts that have a nice pattern that you'd like to buy. Tilly's downtrending for 2 years, probably not going on a lot in the travel sector. Coal, sideways at best. Nothing really there. Caleres, sideways at best. Nothing really there. Burlington. Now, Burlington is more interesting just from a big picture perspective. Up for 4 years. And this year just can't get it going. And you kind of wonder, can it finally start to push through this 220 level and take it up to the upside? Hasn't done it yet. Looks a little disheartening. The PPO looks like it's ready to roll over. Here's TJX. And again, lots of choppy bars in here lately, but nothing really breaking out. So this one, you know, if you wait for it to get through $60, you've only got room to 65 before your next level of resistance. I know it's a liked name. The scooter ranking is holding in around 50. Just saying it's kind of average in the middle of its pack with its peers, not really outperforming. Genesco, really just sideways for the whole post-COVID rally. Ross Stores, sideways, nothing really going on. Children's Place, dropping even harder, so 3-year downtrend looks like it's continuing. Chico's, a 5-year downtrend. Designer Brands, rolling over here. Maybe there's support in this area, but in general, the chart's been declining for 2 years, and it doesn't, heading into this season, there's no sort of real upturn starting. Cato, terrible. Express, terrible. Nordstrom, terrible. Canada Goose is interesting a little bit here. So you're trying to break through this $25 level. We soar up to 36 and we pull back. Maybe it can find support in here and then start to wind its way higher. It doesn't have a scooter ranking, so that's the reason that even though the chart's uptrending, it's showing up at the end, because I sorted on scooter ranking. And then Tailored Brands, you can just see nothing going on. So out of that whole group, very few that were really looking great. I listed a couple of them in there, but nothing really wonderful. We're going to skip over the auto parts sector, so I'm going to shoot down to, let me just go up to the top here. And one more. And what I want to show you is we're going to start with Alibaba. So we're going to broadline retailers. And what you see here, this chart just continues to climb. I like it. It looks good. Scooter ranking's been performing quite nicely. It's gone from 200 to 3.25 in the last, 6 months. And the uptrend just looks nice and calm, which is a nice appearance on this. Big Lots continues to push higher. Maybe we get another push above this $55 level. Looks okay. JD.com, that just continues to work. Really nice chart. Liquidity Services, this broke out from this $9 level, jumped up, pulled back. Now if it could start to do it again, maybe that could work. Hasn't started to move yet, so it's still a very iffy thing. Dillard's, I don't really like the chart shape. It did kind of finally push up here from 30 to 60 in the last month and then pulled back hard. I don't know what the pullback is all about, back to 45. Target, generally trending higher. It looks pretty nice. Amazon, this chart's just been unbelievable. We're sitting here, I think earnings are on Thursday. Again, they've reported pretty solid earnings every time. The Amazon Prime Day used to be in July. It was in October this year, so that's going to push it into next year, so January's earnings on top of all of the holiday season. So it should be quite a spectacular quarter for them in terms of revenues. VIP Shop. I like this one just because it pulled back hard, consolidating, and now looks like it's trying to start working its way back up. It's been trending higher for 2 years. Not sure what the news here was on this bar, but perhaps if this can keep going, this is not a bad place to look at it. Price Smart, this one's trying to get through this horizontal level here. Call it $75. If it can do that, there might be a little bit more upside. Ollie's is right up against resistance around $100. Needs to get going if it wants to make any real moves. Let me just check one thing here. Macy's is the last one. And so for Macy's, really high yield, obviously, but very terrible chart shape. Nothing going on here. This one looks like just the big avoid. Probably want to stay away from that one as much as possible. Now, I'm just going to jump to one chart ahead here. We're going to just scroll down to 8:30. So Stitch Fix is actually one of the charts I really like. I wrote about it last week in Your Daily 5. And on that episode, I mentioned that, breaking through this $30 level, it looks like it's just starting to get going. Hasn't really caught its wings since it IPO'd. So it IPO'd back at $14 all the way to $50, pulls back, sitting down here at 10. And then bounced up really strongly this year, so it's been a double already. But I think what I like is the fact that, it's been building this big base, let's just call it from 15 to 30 for 2 years, and now all of a sudden looks like it wants to try and get a move on it. So I like the fact that it's changing texture. That's probably the thing I like the most about the chart. And this is the longest the Scooter ranking has stayed positive, so it seems like there's some inertia there that could help this stock continue to run. Looking at Hanes brand here, this one's been riding up. I don't know why, but the chart, it's this 4-year downtrend that bothers me. So now we've kind of had a rally and we're back to where we used to be. And I don't know if there's any more left in that one. Tapestry now, this one is high-end retailing. And the one thing that we see on this chart was for this 2-year uptrend, it was staying above its 200-day moving average, then below its 200-day moving average, and now it's starting to pick up again. So perhaps this is like, if there's a period to get into this chart, it's starting to change direction. I like the fact that the PPO is at its highest level going back in 2 years. Maybe there's something there. I wouldn't want to stop very loose on it, but if it could keep grinding higher, I like it when they start to run into this Scooter ranking, and this one just started to go, so perhaps there's some more there. Capri Holdings, same idea. Building a base here at $20, can it start to push higher and actually live that way for a while? A lot of these higher end retailer groups had downtrends for 2 years and are trying to fix them. Funko is just trying to break out of this 650, I'll call it resistance layer, pushing up almost at $7 this week. So 2 nice weeks to get above both moving averages, and any sort of push higher here looks pretty good. All of these retailers had an ugly last 2 years. But again, this was an IPO name, so perhaps they've kind of got what they want to be figured out, and maybe it can start to work up. Unify, looks like this Funko chart just hasn't moved yet. This one's already started to pop up and through. Want to just make sure as it pulls back here, it needs to turn up right away. You don't want to start to see it get right back into the grind territory it was at. Under Armour, trying to turn higher. Scooter rankings at 85, so it's okay. Again, it broke through this $12 level, but it's right up at resistance at 15. Not my favorite chart, and this one hasn't been able to get it figured out for a couple of years. Fossil, I think we all know what they're up against. The Apple Watch has been really dominating the space, so their watch business has gone very small. They have some smartwatches now, but I don't know that they have the full integration they need to kind of pull that off. Anyway, the downtrend is there for 5 years, not really a chart we need to spend more time on. Gildan Activewear, the big t-shirt maker, this is pushed up nicely from 10 to 22, continues to grind higher. It can be a very strong stock where it holds up really, really well for months and months and months. Anyway, I'm not so sure that that's the one that's going to move the needle for me in 2021. Lululemon, just a beautiful chart, continues to go higher. if I had one complaint about it, so it pulled up, it pulled back, and this is roughly 2 months ago, rallied briefly, and now it's just kind of hanging around its 10-week moving average. So is it that its price point is too high for the current scenario where a lot of people are having trouble? I don't know. I like the chart in general, but I think you need to watch it build a little base here, and if it can start to push back up, that would be a little bit more attractive. Columbia Sportswear seems to be heading higher. Had a nice up run in 2018, sideways all of 19, and now trying to get its mojo back for 2020. Under Armour covered it under the other ticker. Nothing really there. Vera Bradley, 5-year downtrend. I think we'll just leave it there. Movado, another watch company, breaking down hard. Nothing really there. And these apparels, you can see the scooter ranking starting to fall here. And these charts just continue to get weaker and weaker. VFC, nothing great on the chart. Again, really wide swinging as we made the lows, starting to improve and into a better pattern. At least it had a 2-year uptrend going here. I think the real difficulty is not a very fast one. PVH, terrible for the last 2 years. Can it finally turn the corner? Oxford, terrible. Okay, don't even know how to say this. Financière Richemont. This one's down for 3 years. I think we'll just let it stay. Carter Holdings, nothing for 5 years, right? Dead money. Let's leave it. Polo Ralph Lauren, bottom of the range for 5 years. Not much of a bounce off the end of March. Difficult. Siku Holdings, still trending lower. Nothing really there. And you get the idea as these scooter rankings get down and zero. So this one had a scooter ranking, and now its market cap probably fell too small and it's no longer got one. But again, used to be a $15 stock, now it's $1. Let's not spend too much time on that. The next group I want to go down to is, actually we're close to the bottom here, I think. Let's quickly run up. And I want to go to this one, I think. What are we here? Footwear. Yeah, I missed a couple at 1190. So we'll just drop back into the next group and close your eyes. I'm going to scroll to the bottom here. And let's just start in here. So here's Crocs, and the chart just keeps climbing. And you can see in 2017-19 it was working, 2017 and 18 working, paused a bit in the spring of 19 and then continued to rally. And here it keeps working. So they've got something going on that keeps this going higher. Decker Outdoor, just a very smooth uptrend. Nothing wrong with that chart, and it looks like there's no reason to expect it not to continue. Looking in on Nike again, it took off. Now, Foot Locker didn't really follow this nice price pattern, but I think Nike was one of the stocks from your Daily 5 a few months ago, and it finally broke out. And that broke out, again, around the $105 level. Now it's at $130. So a nice little 25% move in the last 10 weeks. Wolverine Worldwide, this one keeps working its way higher, not too bad. Skechers USA, trying to get through this consolidation and push to the upside. It's above both its moving averages now. The chart is really choppy, and you can just see these quarterly reports coming into the chart, just shaking it really abruptly. So if you're going to hold it, you got to have a lot of courage, because this one's got a lot of cliff drops or fault lines in it that aren't that great. It looks more like a geophysical chart where you're trying to figure out where the land broke as it got thrust into a mountain or something. Just a terribly broke up chart. Steve Madden now. This chart, the only reason I liked it was because it had a 4-year uptrend going, fell apart here, basing for a while, and just starting, I would say, breaking through whatever, 80% of this base. It had 1 or 2 weeks up there. I like the fact that it's moving above both its moving averages. The PPO starting to turn up. Scooter ranking got to one of its worst levels ever and has now started to accelerate. So I like the chart actually coming out of here at 22.50 going to 25. I know that's up $11 or 11% already this week, but in the big picture, this was a $44 stock last year and I don't know about you, but the shoe styles, I'm sure they didn't drop in half in the last year. Sleep Number, this one's breaking out to new highs. I think if you're not spending money on hotels, maybe you're buying a better bed for your own home. This one continues to work. Furnishings, there wasn't a lot here. After we did Sleep Number, this was the first one in furnishings. The rest of the charts all look like this. They're really not anything there, so I'm not going to spend much time on them. Lazy Boy, like just really too difficult to own. Okay, let's shoot ahead. I want to get to 1360 here. So I'm just going to drop to the bottom of this page and go onto here. And again, this is the only reason we're not covering these stocks off is they really haven't done anything, and so there's no real interest for me there. I think the point I want to make in the next group, which is gambling, starting here with Penn Gaming, they're all starting to do this. They're all starting to button hook and roll below their 10 week. So this has been above its 10 week the whole climb and now is starting to pull back. Scooter ranking is still strong, but I don't find the scooter ranking a good exit tool. When this uptrend in relative strength breaks, so I would draw a line under here, if that's starting to break, that would confirm the trend changed for me. So what was outperforming is stopping its outperformance, and that would be something that I would leave. So here's an uptrend in relative strength. When it breaks, it's not a bad place to get out of the party. It downtrended for a while, started to uptrend, downtrending, started to uptrend. Anyway, it's an okay chart, but I think they're all starting to roll over, and you see this here, starting to accelerate downward. Not really the look we want to see on these names. Here's Boyd Gaming. And we're sitting up nice and high here. The chart's okay, but we had an uptrend back in 2017-18, sideways for all of 19. So after the drop in the 2018 fourth quarter, it really couldn't get going. So it spent the day sideways, and now here we are sitting at $50, and I don't know that it's got the strength to get through with the whole group starting to slow. So to me, the chart is still okay, but I wouldn't let it fall below the 10-week moving average if I owned it. Eldorado Resorts, down below the 10-week for the first time in 3 months or whatever. Again, I think it's just getting slowed down on the whole rate of advance of the COVID where people aren't going to the resorts. Red Rock Resorts, it wasn't doing much to begin with. Like the chart it made 1704 on June the 8th and then hasn't done anything till $20. So it wasn't in a big uptrend, but it's been really tightly knit sideways here for 3 months. Looking at Churchill Downs, the chart in general, uptrending, beautiful. Right now it's rolling back below its 10-week moving average. There's not many periods on this chart where it rolls below its 10-week moving average and restarts. This is probably one of them, and it was brief. But in general, once it starts to get below its 10-week, it's not really a chart you want to hold. So, you're getting a PPO sell signal, you're getting an uptrend in relative strength that's starting to break. All of those things would be flags for me. MGM Resorts, now, hasn't been a lot of money made in this chart in 5 years, pushing up, and just stalled around this $20 level. So, again, even with all the online gaming activities everybody's trying to get involved in, these charts aren't going very far. So Las Vegas Sands, and apparently they're thinking of selling out of their Las Vegas properties. I was thinking, it's going to be tough to find a buyer at this point, and how much are you giving up to sell it at this point? But anyway, this chart's just trading in a sideways range, nothing really going on there. Century Casinos, another one rolling back over here, falling below its 10-week and its 40-week moving average. It wasn't a moneymaker before, and it sure doesn't look like one now. My betting odds wouldn't be falling in on that one. Melco Resorts and Entertainment, still a downtrend, and really, we're trying to hold this $14 support. I don't think you need to be early on this party at all. International Games, downtrending again, same problem. Nothing really going on. We finally got back up to where we were, and it started to fall apart again. So looks weak. Now here's Wynn Resorts. I stayed in a Wynn Resort last year in Vegas. Beautiful hotel, nice place to stay. Excellent dinners, all that kind of stuff. I just wonder, with all of the infrastructure they have, if you're going to start limiting group sizes again and starting to wear masks and all that, or more masks, it's just very difficult for this to start to form an uptrend. So I think we have to let that one go. Here's AGS Play. Now, scooter ranking of 5.9. This thing IPO'd in 2018. Whatever, way up in the $30 level, $25 level. It's now $250. Nothing really there for anybody. Just continues to leave the park. Getting into our next group, home construction. The reason I want to talk about this is a lot of the charts are starting to set up like the gambling charts, where they've been holding above their 10-week moving average and are now starting to break down below that. So that is cautionary for me. Don't really want to see it start to break down. So here's LGI Homes, and you can see holding above the 10-week, brief dip, rallied back up, made a new high, and now dipping again. Momentum is rolling over, lower highs on momentum, higher highs in price. That just looks weak to me, and when you're starting to lose your up wave, it might be a good time to just take some money off the table. Toll Brothers here broke out to new highs around $50, pulled back, sitting around $42.50, but I would just say this is a failed breakout. Your relative strength uptrend is breaking here on the purple area. You're starting to get a sell signal show up on the PPO. Beazer Homes, this is a downtrend in highs anyway to begin with, and now it's right up against that level and is starting to test the 10-week. It hasn't broken it yet, so let's not get too bearish, but it's not as great as it once was. MHO Homes. What we see here, again, sitting at resistance, now starting to fall below the 10-week moving average. Really don't need to be that aggressive on owning this. Meritage Homes trying to do the same thing, falling back below the 10-week. Really good examples on these charts. Just go look. It held the 10-week, then failed it, got above it, failed it, and that was a failed breakout. Fell apart. Back here, stays above the 10-week, fell below it for 3 months, took off to the upside for another 6 months, and then fell below it and stayed below it for a year. So there's really good examples. Just looking at the 10-week moving average, you're starting to fall below for the first time. Maybe it's time to let somebody else own some of these names, especially if you've enjoyed some of the move from 25 to 85. That's a pretty nice sprint. And here we are falling back below 70. MDC, again, breaking down to the downside, not really a comfortable place on the chart for us. Taylor Morrison, big uptrend, again, falling below the 10-week moving average, hitting resistance at prior highs. It's been stuck below this $28 level for 4 years now, and it doesn't look like this one's going to be the next opportunity to get through. Lennar, scooter rankings down around 75, so it's okay, but here you see it again, starting to break through the 10-week moving average. TriPoint Homes, and one of the things I like about going through these charts as a group is you start to see how the whole group is starting to slow down. So it's not like I'm talking about one chart here. We've just done 10 home builders that are all putting in a rolling top and falling below the 10-week moving average. Skyline never really got its momentum going very much. It's been, it was this layer in June. It's still there. KB Homes failed breakout to the upside and really moving down fast now. So it was a $42 stock, now a $32 stock. Those are pretty uncomfortable moves, I think. Nothing we really want to line up for. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recordings on Stock Charts TV YouTube page. Thanks everybody for joining me. Head over to gregschnell.com, check it out, see if there's anything there for you. Bye-bye.